Good morning, Manish. Thank you very much indeed for joining us. Let's start with an overall question first. Have valuations pared down considerably from that 26,000, nearly 500 to 23,500 odd? Does the market look attractive now?
I would say that another 5 to 7% on the downside would give adequate margin of safety. We are not there just yet because obviously the new US president come through and all of that. So we'll pick up from there. But my sense is first we are drifting on the downside, and from there towards the second half of this financial year, fiscal 26, we should see,
So Manish, morning, this is Reema here. What would be your big bets going into 2025? And given the correction we've already seen, about a 10% so far, and you're anticipating a little more on the way down, how has your view on individual sectors changed? Because some sectors have fallen more than the others. So have you changed your portfolio in the last 3 months?
So the big theme to play in India is that the rupee is going to further depreciate. And obviously, thanks to whatever we are seeing on the current account deficit, etc., there is a propensity for the rupee to depreciate even more from the current level. So obviously, IT and pharma would be the ones which would be in the limelight. They will get a boost from the rupee depreciation. Plus, there is also, this Biosecure Act, which will come sooner than later. It was expected sooner, but it now appears that there's going to be some more time. Apart from that, financials, both lending, and I'm also starting to get quite optimistic on the health insurance companies. These look quite reasonable from a valuation point of view. So BFSI and obviously platform companies, both the digital commerce as well as the capital market space. These are the areas where I think there's a high degree of margin of safety in terms of valuation as well as growth. Not so sanguine about, let's say, the capital goods space or the infrastructure, because obviously this will depend a lot on how the government goes about spending. And that has to do with the allocations in the budget, plus the FRBM 4.6% of fiscal deficit by FY26. All of these things, would warrant a wait and watch as far as the sectoral view on these names are concerned.
Yeah, that's a fair point, Manish. All those things should be on your radar. But would you, you spoke about e-commerce and the digital companies. Their also valuations are fairly rich. The Zomatos, the Zaggles, anything you pick, the Nykas. Would you still go at these valuations, or are there attractive valuations in that space?
So 2 points of view, Lata, out here. First, the quick commerce and the food delivery space. There's one school of thought which believes that, we have already seen the best of earnings, in these digital companies. Of course, there's also a point of view that the size of the opportunity is very, very big. The TAM is very big. And when we compare ourselves with China or the developed markets, there is still a long way to go. So from that point of view, I think we're still in the bullish camp, and I would believe that there's room for a lot more players, more than just Zomato, but they'll have to prove a lot of things, and competition is heating up. So, the quick commerce space, we are leaning heavily on Zomato, just that one name. On digital platforms, fintechs, Paytm is one name which we like immensely, because I think the story out here is from a loss net profit in FY24, all probabilities of this company turning net profit in FY26. So that is another digital commerce company that we are liking. Not too many others apart from these two, but obviously we'll be keeping a watch on the new platforms that have got listed, just to see how unit economics play out and how they are going to report profit growth going into the future. But only these two companies for me in the digital commerce.
No point taken, actually. Paytm, after the severe reverses they faced in 2023 to come back and become net profit, the market has, of course, rewarded them. It is one of the gaining stocks. Can we just pull up the 1 year of Paytm? There it is. look at the gain that the stock has seen over the year. If you looked at it in Jan, the stock was closer to about 500 rupees. I mean, it's a huge gain that it has seen in the current year. I wanted to add the other sector that was shining earlier this year, power stocks. They're all smokestack stocks, the BHELs, the JSW Energy, of course, has been doing well, but largely they've been smokestack stocks. Anything you like here?
Only the power financiers, Lata. I think valuations are pretty cheap. Plus, on the dividend yield side, also you will have high comfort. Nothing more on the equipment side. I think valuations, etc., are quite prohibitive. Plus the renewables, I think again we are overdoing things as far as the solar side of things are concerned. Very difficult to really assume that there's going to be so much of an arbitrage between a China and in India. This duty protection that you're giving on the modules and the cells, this is going to last too long. And, somewhere down the line by 2030, of course, the growth is going to come off. And probably the valuation at which some of these companies are trading does not give too much of comfort. So not so sanguine about renewables per se. Nothing so on the power equipment side, valuations, etc. Pretty prohibitive across the spectrum. Transmission, distribution, generation, nothing out there. And obviously, capital goods, again, is a lot to do with the private capex. Private capex, again, is very anemic. And again, valuations leave very little on the table.
So just a few quick questions, Manish. So since you're a bit cautious over the near term, have you upped your cash levels too? And if you had to give our viewers any 2025 top picks, you spoke about Paytm, you like Zomato, you're leaning heavily into it. Any others?
So by design and by policy, I don't take cash levels, but there is good enough number of stocks to keep as cash proxies. Right, so you'll have the large banks, you'll have a Reliance. These are cash proxies. But no, I don't keep cash levels. We are fully invested. As far as the, we can't give recommendations on individual stocks. But I think these four spaces will have ample number of stocks which will relatively outperform. So you'll have the BFSI space, including insurance, and here again. This is one space which I think the health insurance space starts to look very, very attractive now from a valuations and growth perspective. All health insurance companies, they have been beaten down a lot. Then you have your platform companies, both the capital markets as well as fintechs, as well as quick commerce and all of that. Then you have the IT and the pharma. These would be the highest, margin of safety sectors according to me. Till something changes at the margin, you'll have a lot of developments come through over the next 3 months, and obviously a lot will have to do in how earnings growth play out. But a 10 to 12% nominal GDP growth does not warrant a more than a 12% EPS growth as we speak. So from that point of view, I think these would be the sectors which would deliver more than a 12% earnings growth, and that is why they should relatively outperform is what I believe.
Okay. Thank you very much. That's absolutely sound logic. Anybody who's able to give you more than 12 is what you would look at. Thank you very much, Manish Sonthalia, for taking us through the analysis of the year that will be and what stocks you would pick. And have a glorious 2025 yourself.
Yes, Lata. Everybody at CNBC.
Thank you. Well,